Hey, Jeremy Cyrier here from MANSARD. Just wanted to update you on the year-end numbers for 2022 for office, retail, flex, and industrial sales in the greater Boston area. So we've pulled together all of the trades that happened in Rockingham, Essex, and Middlesex counties, valued between $1 and $100 million in 2022. So I put together the information. I'm going to show you some data, some charts, and some market cycle trend information. I hope you enjoy it. And if you do, please give us a thumbs up, subscribe to our channel, and look forward to talking to you soon. Thanks. Okay, so here we go. This is our year-end review of 2022 and looking at the market for Rockingham, Essex, and Middlesex counties. So we're really focused on greater Boston sales trends, commercial sales trends. This is identifying the office, industrial, and retail markets valued between $1 and $100 million. So when we look at the market, what we like to do is look at it in perspective historically, and we track data going back to 2006 so we can see the market cycle year by year for sales volume by buildings traded. And what this gives us a sense of is the relative stage of the market and how active it is. And as you can see here, we had a peak year in 2021 with 829 sales, really dwarfing all of the prior years going back to 2006. Even 2022 ended up as a very strong year with a long-term average at 455 sales per year. So what we saw in 2022 was about 707 trades, which is still quite strong. Looking at our year-over-year effective change in year-to-date sales, we can see the slowdown in the market, namely the transition here that looks somewhat like this downward trend in the '07 Great Recession into '08. Just the scale of the velocity of slowdown. Now, not as deep an effective change as you can see. We ended 2022 with a 21% year-over-year change, and that is a strong change in velocity, but not anywhere as grave or dire as we saw back in 2007, 2008, when transaction volume plummeted severely. The 10-year Treasury's been very popular in the news. If you're reading financial news, you're seeing the constant references to the yield of the 10-year Treasury. Looking at it historically, you can see we did bottom out in 2020 with an average yield that was phenomenally low, just around that 1% mark. We ended 2022 with a 10-year Treasury at about 3.5%. Because we started the year at the lower end of the range, our average yield for the year came in on the chart just below 3%. But what's interesting is looking at the annual percentage change. You can see here that the dramatic increase in the 10-year Treasury by the Federal Reserve shows this very sharp up and to the right trajectory of change. And it does make me wonder, how much further this is really going to go. There's chatter about a rate increase here in early 23, but wondering, I'm thinking maybe this is going to start to taper. And if you look at this percentage change, you'll see that the interest rate policy going back to 1990, an annual percentage change, it does tend to fluctuate. We're accustomed to changes in the 10-year, but it's interesting here that we've seen such a rapid change. So will we see this level off? Will we see it start to come down? When will it start to come down? We're not really sure. Looking at sales volume in relationship to the prior years, again, that annual transaction velocity from 2006 to 2022, 455 deals per year trading hands on average. It's about $2.7 billion annually that we see in the market. Last year, 2022, we saw 707 transactions and $4.7 billion in volume. Now, granted, there's some appreciation in that number, but looking at the sales volume in the market, we can see here that we're still, still had a very busy 2022. Now, the question is, when did the market start to decelerate? And when we look at 2021 in relationship to 2022, and we start plotting these Fed rate hikes in 2022, we see here that the market really didn't start to respond until about October, November, and December, where we saw a tapering of sales happening. And so it was really the shock of those May, June, and July rates, hitting the market, that we started to see the deals closing in October, November, December, reflecting the changing environment. So we're expecting to see that continue into 2023. I would be surprised if we had another 707 unit sale year this year. My expectation is we're going to trend down more toward the long-term average this year in volume. Um, but as this does translate into sale pricing, we do see that there is still strong demand for assets. The retail market is the only market that we've seen where dollars per square foot on an average price per square foot, we're starting to see some adjustment in that market. The flex market, you'll see here, that yellow line, that one is really driven by the life science sector and the amount of money that flowed into lab biotech facilities that boosted flex pricing rapidly. Office kind of holding its own, although our data is indicating that there may be some softening there coming. And then the industrial market also continuing to show strong pricing. Now, nationally, we pulled a Green Street Commercial Property Index just to see how we're looking in relationship to the rest of the country. And you'll see here that Green Street has the market in 2022 ending the year 13% off of peak pricing. So there is definitely repricing happening in the market, and overall sentiment in the market from the CREPI Composite Index, very low. We're seeing very low market sentiment. So that's concerning. But if you're considering selling in this environment, that does not mean that there are not buyers. We are seeing, even in January here in 2023, uh, competition from the buyer pool in the market, where we're seeing multiple offers for assets that we have on the market, but we are seeing a widening in the bid to ask spread. And I think that reflects the sentiment here, where buyers are thinking that maybe the market has softened more than it actually has. They're coming in and making offers that are below asking, and wanting to see how far the sellers will negotiate, but not realizing that 3 or 4 other buyers are thinking the same thing. So the result is a corresponding competitive situation where the pricing is being bid up. So the retail market, let's take a look at the volume. 2022 was a busy year for retail. There were about 350 trades last year. Quite a bit of activity. It's interesting to see this volume going through the market, but also seeing the average price per square foot showing signs of weakening. We do see that the market for retail is strong in Boston. I think we'll continue to see ongoing interest in that market this year. And with the market being forecast to maintain at peak level through the year, I think it's going to be a pretty good year for retail. The industrial market, we saw quite a bit of transaction activity in 2022. Again, not as much as 21, but in relationship to prior years, 22 looked a little bit more like a 2020, probably, probably trending downward somewhat to more of the 18, 19 levels in the market, but anticipating some slight rent adjustments in that market. But the demand in the market continues to be strong, at least for what we're tracking, between $1 and $100 million, and we're expecting that market to maintain and hold its pricing pretty well. As you can see here, the average price per square foot for industrial heading here just above that $180 square foot market for those three counties that we pulled the data from. And pulling Glenn Mueller's market cycle monitor, his forecast for Boston area industrial, again, a peak year, maintaining strong pricing and low vacancy rates and strong rent demand. Now the office market, our last asset class we'll look at. Pricing here, maintaining actually pretty strong pricing. This is predominantly suburban office because we're pulling from Rockingham, Essex, and Middlesex counties, but we are seeing this market start to show signs of softening just in terms of velocity. And I'm not sure if this is a result of buyer pullback from the market. The pricing certainly doesn't seem to indicate that, or it's a reluctance of sellers to enter the market because they're not confident in buyer appetite for office product. Regardless, we are seeing here in 2022 a decline in transaction volume. And office buildings are still trading, but we are seeing a downward trend there in interest. And Mueller has charted office going into the third quarter of 23, sliding down. In he had at the prior video I did, you'll see the second quarter estimate for 23. He had office at the 5 position, which was a late stage recovery. He has since moved that down a notch to the 4 position, which is showing signs of ongoing softness in the Boston office market. So if you like what you see here, we'd be happy to chat with you and have a consultation about any questions you have about the market, share our expert market knowledge. Please do subscribe to our YouTube channel and feel free to hit us up online. You can shoot us an email or call us or just visit us at mansardcre.com. That's MANSARDCRE.com. I'll be happy to have a one-on-one conversation with you to talk about any market questions you might have. Thanks. Take care.